Hey everybody, good afternoon, good evening, wherever you are. Doc Severson's here with you on the Ready Set Crypto Market Minute. We'd like to do this every so often, well, maybe even once a day if we can, as long as there's not too much friction. And yeah, we'll get into your questions in just a minute. So what I'd like to do here on these market minutes is I want to keep them fairly tight and short and to the point. So before I get into this, I want to let you know we're not going to be recommending anything. Please trade only with the risk capital that you can afford to lose. Treat this like a business. Seek an edge before you invest, or you will trade along with the rest of the investing herd and lose money. So don't do it. All right. So I'm going to go over today's market outlook. Now, going forward on these market minutes, what I hope to do, depending on the type of questions that I get, is look, I realize that 90% of success in the market is actually up here. It's based on your mindset. It's based on your preparation. It's based on your approach towards trading. And it's not that easy. It's not something that you just pick up by listening to a TV station or just read a book or anything like that. This is something that you have to work at quite a bit. And it's taken me the majority of my career through the last 22 years to master this part of it. And in fact, I don't think you ever really master it. I think that you get better at it. This is why a lot of people have success early in trading and then all of a sudden wonder what's going on, because they're human beings. So not going to do any of that today. Today, I want to go right back into today's market outlook. All right. So we're going to get right into the charts here. And why not start out with Bitcoin? Howdy, howdy, guys. Good to see you. So Bitcoin is our de facto index for the crypto market. It really is. It's still the big dog. It is still the dominant factor in crypto. So as goes Bitcoin, so pretty much goes the rest of the market. So I'm going to be spending a few minutes just talking about Bitcoin here and what happened over the last couple of days. Now I'm going to refer to a series of rules that I have, like rule number 1, rule number 2, rule number 3, those kind of things as it relates to price action, as it relates to how markets move. And so you'll hear me say these things over and over and over again. And hopefully you get sick of hearing that, because if you do, you'll start to hear it when you trade as well too. And if you apply the principles that I talk about, it will make a difference. It's taken me a long time to acquire these. Perhaps it won't take you quite so long. So what do we have with Bitcoin? Well, rule number 1 I have of price action is most easily seen with a weekly chart, is that rule number 1 is that larger time frames dominate the trend. Larger time frames dominate the trend. Larger time frame in this case is the weekly chart. So weekly chart is heading to the downside. I'm assuming everybody can hear me okay, can see everything all right, and this is working. I'm doing this on the fly. This is the first time I've done one of these solo without my buddy Mav. So hopefully this is coming across all right. So rule number 1, larger time frames dominate the trend. What are we seeing on the weekly chart? Well, if you don't know, we're seeing a lower highs and lower lows, and lower highs and lower lows and lower highs. And what is this one over here? Is this a lower high? Okay, you can hear me. All right, good job. Outstanding, boys and girls. Thank you very much. So we have lower highs and lower lows all the way along here. The weekly chart is still in charge. Imagine, if you will, when you were 2 or 3 years old, walking hand in hand with your father. Hopefully that happened to you once upon a time, right? You're walking with your father. Which way are you going to go? You might want to be looking all over the place and jumping puddles and stuff like that. Guess where you end up? You end up wherever your dad wants you to go, right? This is the way that happens. The larger mass is going to have more momentum. And this is the same thing. A larger time frame chart is going to have more momentum to it. So we are still working to the downside. So that is rule number 1 of price action, is larger time frames will dominate the trend. Okay. However, rule number 2 says that reversals happen from the inside out and propagate higher. So how do we apply that to this? So we're going to go down in time frame. Let's go down to a daily chart. Reversals happen from the inside out and they propagate higher. So actually, the recent reversal was probably, we could see this on a 1 hour chart, makes a lower high, lower low, right? Destroyed right off the bat here. But what do we have here on the daily chart? Let's go out to the daily chart. Is this a downtrend? Is this a downtrend? So you don't have to answer that in the chat room, but ask yourself, is this a downtrend on the daily chart? The answer is actually no. This is still an uptrend on the daily chart. Okay, what do we have here? We have, see if I can get my pen here. We have a series of higher lows and higher highs on the daily chart. What is this little aberration over here? This series of candles. That's a pullback. That is not a trend, my friends. That's a pullback. All right, so this is where we start to get into some of the terminology. Now, when will this turn into a downtrend? This will turn into a downtrend when the daily chart starts printing lower highs and lower lows. Can I make the chart larger? Ah, I can do that, in fact. Thank you very much. Okay, we're going to go with Little Doc, big chart. Thanks for bringing that up. Little Doc, big chart. Okay, so this is not a downtrend yet. What will have to happen for this to turn into a downtrend is something like this. So one of two things can happen. Either this plummets lower and prints a lower low. And if that happens, which I don't think it will, then it'll be highly likely that we'll see a lower high from there, and it's probably all over from that point. I don't think that's going to happen. What's more likely to happen first would be a rally of some type, printing a lower high and then a lower low. Now we have a downtrend if that happens. Okay. Okay. All right. Thanks for that suggestion, by the way. So what we can also do is, this is where the fibs can be helpful for us. Now, I know that some people get religious about fib retracements, other people hate them. What we're going to do is go all the way over to the left-hand side with a little pitchfork dude over here. Okay, so we're going to select the pitchfork and we're going to go down to fib retracement. I'm going to draw this all the way from the bottom up to the top, and I'm going to zoom in on this. I'm going to zoom in on this guy. Now, here is just a rough rule for you guys. It's just a rule of thumb for you to use fib retracements. It's very normal to see the price bounce at the 23.6. It's very normal to see the price come down and bounce at 38.2. That's actually a better one. 50% is technically, I've been corrected on this in the past, it's technically not a fib retracement, but it's sort of a de facto level, 50% of the move. Next up is 61.8, which is right there, which is right where the price is right now at this moment. 61.8 is kind of the last line of defense for the bulls. If the price ends up closing, so we have yet another, it looks like 6.5 hours before we have the end of the closing day, right? So the price has got 6.5 hours to trade. It can do whatever it wants to. If the price closes below this level, then it's likely to fill in the triangle. All right, let me repeat that. If the price closes on a daily candle below the 61.8, then it's likely to fill in the entire triangle and go back and retest the lows. Remember, it's not a downtrend yet. It's not a downtrend yet. So what'll have to happen for a downtrend to kick in is, if we do get a bounce from here, it's going to have to print a lower high and then a lower low. So keep that in mind. So that helps you, what I call, frame in the price action. This is what you want to do, is you're not using technical analysis to forecast or predict the future. What you're using it for is to frame in your decisions going forward. So if we do get a close above that level, then I'm expecting a bounce perhaps over the next couple of days. I don't know if it's going to be any more than a dead cat bounce, It could be anything, right? With the amount of short interest that we have out there, we could squeeze this thing higher. It's still an uptrend until it no longer is an uptrend. But if it goes below 61.8, it drops the probability that will remain as an uptrend. It's more likely that it's going to drift lower and retest the lows. Okay? So that's kind of what I want to talk about for today. And I want to go for too long here. I don't want to turn this into Doc's Market Hour. So with that, if there's any questions that I can address over the next couple of minutes here. Yeah, the Fibonacci cult. Let's see, who do we got on here? When is the flip going to happen to Cardano? I don't know. You know, a lot of people ask, you know, what do I think of this coin and what do I think of that coin and so forth. And honestly, everything that you ever want to know is baked into the price right this very second. So we'll have more to say on that either later on this week or perhaps next week when I talk about evaluating news versus the price and things like that. What is a dead cat bounce? A dead cat bounce, or if you want to be politically correct about it, it's called an expired feline recoil. This is when the price drops like a stone, and then basically, as if you, not that I would ever recommend this, but if you did drop a cat off of a building, what would happen to it is it would bounce before it rolling over again, right? So this is, look, I know, it's just an expression, all right? I'm not a cat killer. So this is what would happen is when you have a very strong move like that, typically you have some type of oversold bounce where this is where the shorts buy back their positions, take profits on it. Perhaps some longs try to jump in there and get it. But then what happens is the sellers overtake and it goes down again. Right now, this is Cardano. Cardano is still in a primary downtrend. How low do I think it could go? You know what? It doesn't really matter what I think about something. I'm using the price to understand what's happening here. Obviously, we do have a fair amount of support, which is down here at about the 5,800 level, right? So let's go auto. Let's get rid of these fibs here. Let's take them off so we can see what's going on. So we have a fair amount of support at 5,800. If we lose 5,800, next stop is 5,000. After that, the next stop is 3,000. So again, don't use charts to predict the future. Let them allow you to make decisions based on what you're seeing. Okay, one last question, and then I will say a goodbye to you for today. Let's see, Cat Killer, Bitcoin on its ninth life. Yeah, what charting program am I using? This is TradingView. TradingView is kind of the 800-pound gorilla right now in the crypto space. So the other big boys like TradeStation and QCharts and eSignal and all the other programs like that either just don't have the data feeds, they don't have the connections. They've got wonderful charting programs, but they just lack the data right now. You'll eventually see just about everybody get into it, but right now, TradingView is actually a really, really good solution I'm very happy with. Okay, guys, thanks for hanging out with me, boys and girls, for today's Market Minute. Want to keep these tight, and if we can do this like this, frictionless, we'll do these every day. So store your questions up, and I hope to see you guys again. And, you know, maybe even tomorrow we will do another one of these sessions. So thanks again for hanging out with me. And I'm Doc Severson, and I'm out. There goes a sight from my soul. There goes a sight from my soul. There goes a sight from my soul. I think it's all angels just walk by.